Lyft announcing plans to cut 17% of its workforce and furlough hundreds more as it deals with the fallout of coronavirus. This after the information reported that Uber is discussing plans to lay off about 20% of its employees. And WeWork is going through another round of layoffs as it cuts nearly 100 workers at its San Francisco office. Meanwhile, Airbnb's CEO is telling NPR he's still, quote, very confident the company will have its IPO this year, despite lowering its valuation. So how big of a setback is this pandemic for the sharing economy? For more, I'm joined by Santosh Rao. He's head of research for Manhattan Venture Partners, which was a mid to late investor in Lyft and Airbnb. Our Deirdre Bosa with us as well. Santosh, let me just start with you. I mean, you seem relatively optimistic still on the likes of Airbnb.
Yeah, absolutely. Thanks for having me, Kelly. I think let's see how the dust settles on the other side of this whole thing. But I think overall, I think the gig economy is going to be around. It's going to do very well. It might take a different shape slightly. They're going to add added cost layer there because of safety and security features in there. But at the end of the day, I think Airbnb, Lyft, and Uber will do well. There are going to be a round of layoffs, and understandably so, every sector of the economy is going to get hit. So they're cutting costs. So I'm not worried about them cutting costs as expected, but I think overall they'll come out of this stronger on the other side.
You know, Deirdre, I just look at the Journal, front page today. They're talking about the bargain with the devil, that people are furious with Airbnb. I hear this all the time as well. Maybe you can just say, hey, it was a learning experience for everybody going through this, but I do wonder not so much about the gig economy, but the sharing economy, this part in particular where you're sharing your home, you're sharing your workspace, you're sharing a car, if that has some serious challenges ahead.
Yeah, Kelly, I love how the Journal put it. They called Airbnb, these property owners that own numerous amounts of homes or apartments and rent them out. They called them the upper crust of the sharing economy because that's really what they were. There's a whole economy behind Airbnb itself that includes interior designers, maintenance people, cleaners. But looking at the sharing economy at large, I think that what you're seeing right now is a lot of these weaknesses were already becoming exposed. The coronavirus pandemic is just speeding that process up. Even before the coronavirus decimated demand for ride sharing, you saw that public market investors were demanding more visibility into paths to profitability for the likes of Uber and Lyft. They were burning through, and they still are burning through, billions of dollars a year. And this pandemic happening right now doesn't give them a lot of opportunity to get on top of it. So what you're seeing now is demand decline. They're having to lay off, fire. In some cases, Lyft this morning, 17% of its workforce, that's nearly a fifth. So they're in a lot of trouble. And while I understand that perhaps they come out of this stronger, they have to come out of this. And the rate at which many of them are burning through cash, another example is WeWork. I think that that's still very much a question because we don't know how long this lasts.
Right. And Santosh, I know you guys were mid to late investors, like we said, in Lyft and Airbnb. I assume, that probably leaves you still a pretty good margin, of money on these equities. But I guess you tell me, even though the CEO says Airbnb can still go public this year, you doubt that can happen. What are some of the valuations that you think are more realistic post-coronavirus? Are we talking about valuation cuts of 50% or more?
Yeah, I think, it's a lot of things are moving. It's too many moving parts at this point. It's very difficult to pin a valuation. Of course, there is a fear factor that is driving valuations down, but I don't know if that's permanent as yet. Yes, some trades are going off early, according to some estimates. But I think overall, you'll see that things will settle. We need to see some clarity as to where this whole thing is going. If we have enough safety features in there, and if there is a cure, the health risk goes away, then if slowly business reverts back to normal, which might be maybe 3 months, 6 months, we don't know yet. So I think the valuation is going to depend a lot on how things settle on the other side of this. So I think Airbnb, yes, I think right now there is headwind. They are burning cash. They have some issues with the hosts and the guests and all that. That'll play out. That was expected. And like Deirdre said, the fault lines have been exposed. There were some fault lines before, but they were working through them. But I think they will settle it. I think what this has done is really exposed all that. We need them to come out stronger on the other side, and the market will force them to come out stronger on the other side because we need them. The sharing economy is an integral part of our lives, of our economies, and I think they will come back, they will innovate, and they will come out stronger on the other side.
Deirdre, we'll give you the last word.
Well, Cal, I disagree with Santosh that you can't put a pin on these valuations. You can. They're becoming very, very clear. Airbnb last raised equity a few weeks ago at a $16 billion valuation. That's about half of where it last raised money. Uber right now is trading at a less than $55 billion market cap. At one point, it was pitched as a $120 billion company. It was worth $76 billion on private markets. Lyft also trading far below. So these are critical times. And I also would just add, lastly, who's the biggest investor in these names, the biggest backer of the sharing economy? That would be Masasan and SoftBank. So you have to look at the role that they have played in boosting up these valuations that now seem very, very much at odds with how public market investors and even some private market investors are putting on them.
Santosh, just real quickly, is there any company that you would now invest in because of coronavirus? You know, I'm thinking of the likes of Instacart. I mean, there is going to be a whole new economy that crops up as a result of this.
Yeah, I think the delivery companies have come out strong in this whole thing. They have proved themselves. So we are investors in Postmates and a number of other companies. There are a lot of opportunities at lower valuations, like you talked about earlier. So I think there's great opportunity for investors to get in here at a time when there's some unreasonable sell-off, unwarranted sell-off. It's all reflecting the fear factor in the economy. I mean, at one point, there was almost a death sentence with this coronavirus thing, and that's going away. And we saw the press conference just now. I think things looks like things are opening up.
Yeah.
I think the valuations will pick up as well as we get more clarity on the other side of this whole thing.
All right. Well, maybe an opportunity, like you said, Santosh. Thanks for joining us. We appreciate it. Santosh Rao of Manhattan Venture Partners. And Deirdre, thank you for the great reporting as well. Our Deirdre Bosa.